Hi, this is Theo from electrofx.com. Welcome to this third video in my free video series. So far I've introduced to you all the pieces of the puzzle that I consider to make this up and to give you a strong edge in this market. The next thing for you to do is really to practice what you've learned and make sure that you understand what you've learned. So besides reviewing the information, you can actually use MetaTrader to test yourself in a real-time environment, and I want to show you two techniques to do that before I move any further into this. So I have the euro dollar up H4 chart, and the real simple fast way to do it, but quite an ugly method, is to turn off your chart shift and your auto scroll, which are these two buttons up top, and hold down your page up key for a little while. It will rewind back far enough that you couldn't really remember what's going on, and you want to really focus on the candle that is to the far right of the screen, the last one that you can see, because now by using the F12 key you can work your way through the chart one candle at a time and pause after each candle and see if there are any decisions that you would like to make, and really do all this on paper. So paper trade your way through it. Wherever you feel you may have entered, jot that down. Did it hit your stop loss? Did it go to take profit? And this is really not that exciting, but it'll give you a chance to see if you understand what you're doing, and to make sure that you're winning above 50% of your trades, plus you're generally always winning more than you're risking. This is really your goal. So anything 60% and higher, whilst winning most of the time more than you're risking, is actually all you need to be doing quite well with this. Now if you can do better than that, which is very possible, then that's great, but that should be your real start base point. So that's one way to do it. Not that exciting, not that appealing, of course. There is one other way to do it, and it's using the strategy tester that's provided with MetaTrader. If you go to view strategy tester, this area pops up at the bottom. I've set this up for the video, but you just want to select the pending order EA because it actually does nothing unless you place the lines that I outlined in the first video. Choose the euro dollar or any symbol you like. Go to the H4 chart, the every tick model, and check use date and visual mode. Okay, put the speed to maximum, and this button is pause and play. So when you first set this up, it's probably going to play and you need to pause it, but I'll show you that in a sec. I've set up just 1 year of information here on the dates from and to, and when I click start, it's going to gather the data and just make sure it's got all the information it needs to perform this year that you've told it that you want to do. So let's just wait for 1 sec here. Okay, there it goes. Now when it starts, it's probably going to be moving along, so you're going to want to pause it and just apply the ATM free template. Now the bonus about doing it this way is that you have some space over here to the right, so it's more in the middle of your field of vision as opposed to the edge of the screen. And these supply demand support resistance boxes are actually going to be drawn in for you as they would be drawn in real time. Candles, of course, they don't repaint, so this is all information that's very much a real-time environment. And what you can do here is just keep your mouse over this play pause button and hit play, and when you see a candle form, hit pause. So I play, I see the candle, I hit pause. I play, I see the candle, I hit pause. And work your way through the information, once again making all the decisions that you feel you would make, and just practicing everything you've learned. Okay, this is not ideal, but this is a way that you could run through a year of data and see how you do in a much shorter period of time than a year. As you can see, we can get an H4 candle, a 4-hour candle in seconds instead of 4 hours. It's quite hard to follow the short-term, the long-term price action when doing this. But it's a start point for you to practice these short-term waves, trading them using support, resistance and supply and demand, and of course the price action that they are showing to you on the screen. So this is just something for you to, a tool, a way for you to use MetaTrader to speed up your learning process. I'm going to stop that and close that one down. We'll go back to our H4 chart here. And the first thing that I wanted to do at this point now is to show you a way that you can see the exact same information that we've been going over, but in a slightly different way. And it's a way that I prefer personally. Some of you may prefer it, some of you may not. Up to now, when we were talking about the long-term and the short-term price action, it's all relative to H4, but we were talking about zooming out to see this long-term price action. As you remember, it's quite obvious. These waves are relative to one another. Okay, so we were looking at that by zooming out, and then of course by zooming in we were observing the next scale of wave activity down and using, you know, the short-term wave patterns to turn the long-term waves. So obviously it's good, you really do need to be watching both of these scales of activity in order to trade one, and that being this short-term. I mean, these are the trades that really we want. They're intra-week trades, they're quite large, quite solid, and it's a good place to start. But in order to trade these successfully, you need to be aware of what's going on one scale above it, which of course is the long-term waves we were looking at. Now if we just create some room here for another chart, and I open up a euro dollar and I put it on the daily, I've created a daily template for you, and I'm just going to apply that right there. And the reason that I've done this is because this is a very effective way to keep track of the long term and the short term that we've previously done by zooming in and out at all times on one screen. So you're not zooming in and out and you're not shifting your focus. You're able to see both at the same time. Now, you know, this is clearly what we were just looking at, and you probably remember the structure of it, and now it's quite clear that that is this other level that we were just viewing by zooming out. So now we're able to view it without zooming out, and it's actually on the screen at all times. Now, as I mentioned, in order to trade this these short-term waves successfully, we need to be aware of what's going on the long-term wave scale. You know, most importantly, if we wish to trade counter trend on the short term, it needs to be at a good location based on the structure and what's going on that long term. So by seeing both at the same time, you're just saving yourself the hassle of zooming it in and zooming out. You know, this is really an optimal view. You can certainly go one back on this and one back on this, so you can see a little bit more information. I mean, clearly you can still see your candles, it's not a problem. These are personal preference things, so I'm just showing you the options available. You know, and following along that same line with options, if it was your goal to trade these longer term waves, which are of course now relative, the short term waves on the daily chart when we're talking relativity, then what you would want to do is switch that one to weekly and this one to daily, and then you could do exactly what we've just been covering, only now you're observing this level of wave in order to trade this next level down. So I mean, as you can see, the exact same principles are being applied throughout the scales. It's up to you which scale it is you want to trade. But whatever scale it is you want to trade needs to be here on the right, and it'll be the short term on that chart. And so you need the one above it, which can be achieved by zooming in and out on the same chart, or having another chart open that is one scale above it. So, you know, I don't think too many people want to trade at that level, but if they do, that's your option. I'm a big fan of these H4 for my longest term trades that I'm after, because they're intra-week, and you know, that's really as long as I want a trade to be going on. That's my personal preference. So those are a couple of options for you, and the main bonus with viewing things this way, we're viewing the same thing but I've just introduced to you a slightly different way of doing that same thing. And the bonus here is that you're actually looking for the same scale of movement on this chart as you are on this chart. So instead of looking for two different scales of relativity to map out your long term and your short term, you're looking for the same scale of wave activity on both of these charts, but by default they're a different scale due to the fact that they're different time charts. So what do I mean by that? I just mean that we're looking at things that are that size on this chart, and we're looking at things that are that size on this chart. So we're looking for the same size waves, and we're only needing to train ourselves to spot this one particular size of wave. Because we're using the multiple time frames, the multiple charts, by default we're monitoring two different scales of wave activity. So I mean, this may appeal to some of you, and you may just prefer to do it all on one chart. That's entirely up to you. But I'd like to present this option because as we move through and we get deeper, I'm going to show you how I actually prefer doing this on 3 levels, and we're going to introduce another chart. So you need to understand this process and really understand the underlying concept and why it is what it is. So that's this next phase, the next step through the course that I wanted to introduce. As you can see, this is the euro dollar, and since I made that free book and the first couple of videos, we've had a couple of trades. We can take a look at those since we're here. Here we've got a mirror flip, and what's interesting about this trade is I'd mentioned in the previous video that when I'm trading the trend continuation, once we go beyond 5 waves, it's just a rare occurrence. So you need to really take into consideration as much of these pieces of the puzzle that you can. So what do I mean by that? Let's just take a look right now at this trade. We have quite clearly 1, 2, 3, 4, 5 waves. So anything after this point, we need to be cautious, and I need to take into consideration as many elements as I can. So what really sticks out to me on this particular example is that these last 2 waves of movement down were actually quite equal in strength, and if anything, this second one was more powerful because it happened in less candles. I mean, it's obviously got a lot of power to the move straight away. What other information do I have available to me? Well, we've arrived very close to this longer term price action turning point, and so anything further, in order to be safe, you're going to want to trade a higher low, most definitely, as opposed to shooting for a lower low. Now, it did make a lower low, but that doesn't matter. We're really playing the probability here and sticking to what's most likely, as opposed to being overly ambitious. So what else is going for this trade? Well, the other thing that's going for this is it's a mirror flip, which is very indicative of power and direction, as opposed to pulling back and retesting this area for the next wave, which would have been a viable option. Certainly we could have pulled back to here and gone for the next one. Instead of doing that, it's actually using that mirror flip. So we have more indication of power and direction right there. The indecision candle, that little pin bar IB right there, gives you an entry point, and because it's a mirror flip, we're just using the top of this area as a stop loss. Let me just mark that in a little cleaner. So before you enter the trade, you know where the entry could be, and you know where your stop loss is going to be. You know the risk on the trade. And because of all the information I pointed out, we're at this area on the daily. It's a viable place for the daily wave to turn. The long term, I mean, I'm just referring to it as the daily now because that's what we have with these 2 charts up. Same thing as before though, long term, short term. You can just call them now daily H4. It's all verbal dialogue. The entry and the stop loss is apparent. The risk is clear to you. In order to take everything into consideration, shooting for a significantly higher low is most definitely the intelligent thing to do. And the fact is that even shooting for a much higher low, it does allow for a 1 to 2 risk reward. So you're able to get twice as much as you're risking, even being extremely conservative on this play. So this is very much a viable option. Even though it's a 6th wave, the 4th and 5th wave are powerful. They haven't shown any signs of weakness, and you have a nice tight stop loss, and even your conservative take profit gives you twice as much as you're risking. So there's absolutely nothing wrong with that trade right there. As we progress through this chart, and based on all that same principle, this is a viable area for that daily wave to turn. So at the same time, if we could have a nice pattern, a double tap or a 3-point turn to try and trade the turn of this longer term wave, then that would be completely fine too. And as you can see, you have an inside bar right here. You can see that this is the area you're trading, and because we're counter trend, all this activity, but after 6 waves and a good place for it, this is an extremely viable trade. And conservative take profit, once again, it's above the 1-to-1. So there's nothing wrong with this trade. This is a losing trade, and it's really nothing to worry about. Losing is part of winning. You're not winning them all. I keep repeating it, and it's just the way it works. You're not going to win them all. So if you don't take these trades, you're not going to get the winners either. And this is a viable trade. So there is a very clean loss right there. As we move along, a little bit further, the next thing we have is a pullback right here. We really don't want to be trading a 7th wave right now, because now you do see a little bit of slowing. Alright, the only thing that's going for it is we broke this daily area right there, and this is another concept really, which is a high-low breakout trade, and we haven't got there yet, so I don't want to go into it in too much detail, but you can see that as that area was broken, you can see a much faster wave of activity, and so this could be taken on that next scale down I mentioned, and really this is why I like to watch 3 scales, but we haven't got there yet, so I'm not going to jump ahead too fast. Alright, so let's just move along, because there's nothing to do there on using these 2 scales. There's nothing really to worry about there, unless you're able to see this next scale down within these 2 charts. You'd be able to make the play, but as I say, this is once you have the knowledge and ability to do so. So for now, the information available is that was the area that reacted. Certainly we broke that area, and the next area over here on the long-term price action is this box that's drawn out for us, and we haven't got there yet, so it's not a fantastic place just yet. Once we come back and we have a pattern there again, although it's not an ideal place, we have everything for us except for that one little part. Location wise, on the long term scale, on our daily chart, it's not an optimum location, but looking at the short term waves over here, our H4 scale, we've now had 7 waves of movement down, and as I said, this is rare. This is just an experience thing, and you can back check your charts as much as you like, and you can take a good look at this. It's just not very common that you get this many lower highs and lower lows in a row like this without any sort of real reset anywhere, and that is a strong point that's for the trade. If you want a great location on the long-term wave, then you don't take this trade. It's quite simple. When in doubt, stay out is my motto. So if you're not happy with it, you don't do it. But you do have an inside bar, and it's a very precise reaction at that exact same area. So there's quite a lot now that has built up for this area. You wouldn't want to be trading this area there, because obviously it would be counter trend and a little too preemptive. But now the area created itself, and it was returned to, and we had another indication that the area was holding through this IB, this inside bar. Once again, you have an entry point and you have a stop loss, so you know your risk before you enter the trade. As an extreme double bottom there, a double tap, there's no real angle to to measure the momentum of this right now, everything's on a horizontal. So your most optimistic is shooting up here, and shooting for a lower high is your conservative play. So that's your conservative play, and that's your most optimistic. When you measure your risk, certainly the reward is good enough that it's well above 1-to-1, even at that conservative target. So that's the next trade that really sticks out and has substance to me on looking at these two scales. The next trade that sets up this downward play was a news reaction. We've had the double bottom and then a higher high, so I would not want to sell into that anyway, even if it wasn't a news reaction. So this is just a trade that has no proper entry, and not a trade that I would take. At the point we're at right now, we've had the higher high and then we've actually had a lower low as well. So the market's kind of an open book, and you'd really be looking at trading this stuff on a smaller scale once again, and so we'll get there shortly. Okay, this video has gone on a little longer than I expected, and I want to jump into another pair, but I'll just separate it now and give you time to process this, and we'll move into another pair in the next video. The final part that I'd like to introduce for this video, the option that's available, is I'd mentioned that was a news reaction, that's selling right there. If you just open one more chart, I've also provided a news template for you, and if I load that up, it's a very simple news template. I don't trade the news, I'm not that interested in the news. I can read the news reaction with technical analysis, but if it's a good idea to keep your eye on it, because any of these red major news events can change the dynamics of what is setting up on your chart. So you don't really want to be entering a trade 10 minutes before a red news event, for example. So if you do want to keep your eye on the news, you can open up a chart, doesn't matter what time frame, load that news template in there, and 5 minutes before any of these news events, it will just sound a little alert for you, and also as the news release comes out, you'll also have another alert. So it just keeps you aware of these major news events, and there are various settings in that indicator. I won't go over them here, you can take a look for yourself. They are all very self-explanatory. So for now, I'll wrap up this video, and we'll get started in the next one with a new pair, and use this same dual chart layout to monitor the long-term and the short-term waves that you've learnt about so far.